and welcome to today's edition, or this week's edition of Business Week. And you're with me, Chanda Juliet. I will be your host. We're together up to the hour of 19. And it's interesting to in this week's Business Week, or rather, the episode of this week in Business Week, we're talking inflation. Of course, we always talk business, and then we're talking of inflation, the rate of inflation in Zambia, how it has affected Zambia, and the effects as a whole, as you are a citizen of this country, how you are affected with the increment of the inflation itself. So, as at now, we have an increment of 24.60% of this inflation as of, June. And then last year in May, it was at 23.20%. And I'm privileged to have a Lusaka-based economist, Mr. Chisanga Kelvin. Thank you so much for coming through, Mr. Chisanga.
Thank you. It's always a pleasure to be here.
Thank you so much. So do stay tuned. We're talking inflation, and we always talk business here. So do stay tuned so that we can understand what this has on our country, what this has on you as a person, on your today life. So, Mr. Chisanga, what is inflation in an economy? We're talking about an economy, our Zambian economy.
Okay. To just explain it in a very simplistic manner, inflation basically works with the commodities, and also it also has a component where it works with the domestic currency in this case. Maybe just to give a better explanation in this case, I would say that it's the actual loss of buying power or purchasing power over currency. That is basically the term it can actually be classified to be. But of course, giving it in a very different dimension, I would say inflation is when a few items chasing a lot of like in this case the money supply in the economy, it might be a little bit quantifiable to chase few goods. So it's basically the opposite of enough and scarcity.
Exactly.
That's what actually complies in the inflation pattern.
And it's good when we talk of inflation, like you said, we're talking of the purchasing power of a given currency.
Yes.
And Mr. Chisanga, what are some of the examples of inflation that you would give at this time in Zambia, looking at how things are?
Okay. Of course, if we to look at the Zambian case in terms of inflation studies, maybe I would tell you to say that even when you look at the empirical study that has been carried over time, inflation in Zambia is basically where we see it, accumulating from a point of low materials or production. Or sometimes I would term it to be in this way. It actually comes as a result of the import-driven commodities. So the Zambian case scenario is that inflation, it is actually basically triggered as a result of many variables that one would actually itemize to point. I'm sure as we go along, I'll be able to give you a typical type of inflation.
And when you talk of the many variables, Mr. Chisanga, what are the types of inflation do we have? Can you tell us the causes of inflation? What has caused us, for example, to reach the 24.60, for example?
Okay, maybe just to begin with the types. There are quite a number of types of inflation that we could actually point to suggest or describe. Of course, if you look at it in a theoretical way, inflation has got about 4 types. That's the type of which actually based on the rate of movement actually. So I would say that the inflation that we normally receive, even in the Zambian case, might be described under any of these 4 types. But just to give you a summary of the 4 types, there is what we call creeping inflation, there is walking inflation, there is hyperinflation, and also there is galloping inflation. So all these are types of inflation that we normally see from the theoretical side of things. But when you come in the technical setup, we've got what we call push-through inflation as well as demand pull inflation. The Zambian case has been always faced with the inflation that is called the cost push inflation, because basically our inflation pattern in Zambia comes as a result of the import commodity goods that we normally have, in this nation. Of course, if you look at the economic architecture of Zambia, Zambia is importing almost close to about 90% of goods. And if you follow me very closely, you find that the aspect of our product composition may be coming from South Africa being the largest supplier of most of our commodities in the market. They have also their own inflation. So when they are pushing through most of the commodity in Zambia, those goods come with the imported inflation. And as a result now, if you look at the impact that is coming also from the exchange rate, it's also triggering another type of inflation from there. And by and large, I would say the inflation that we have actually been even faced with in this nation is actually triggering so much from the exchange rate.
Exactly.
Yes.
Mr. Chisanga, just to take you back a little, looking at the 24.60% that we're at right now, and the 23.20 that we had in May, that is, how do you describe the increase? Is it a rapid increase? At which rate are we moving at? And with that, how do you look at the Zambian economy in relation to this same inflation rate that we have at now?
Well, maybe just to give you a background a bit, of course, we have had two of our monetary policy briefing, which took place early this year. Of course, we had the first one which set the tone. Of course, if you consider it in a way, it was increased by 50% basis, which has been maintained up to even this moment. Yeah, the essence of what the central bank or monetary authority has been trying to do is that they are trying to actually curb the accelerating inflation. And their expectation, as well as their consideration, were that if there will be agriculture output, we'll be able to moderate our inflation, but has worked against the projection. So in this case, what should happen, or what is really happening in the economy, is that the surging of a small percent of about 2 or 3% of on the inflation figure, and of course landing away from the range bound, which is about 6 to 8%, is basically triggered as a result of the less impact that is coming from the policy rate, because the policy rate is not having so much full effect in the exchange rate. Where we are seeing a huge quantum of impact for the inflation that we have in Zambia, it's not on the production that we're able to see, where we talk of maybe, say, of course, even the local production, like, where you are selling chicken from the poultry, or you're selling beef from Zambia, and lots of things like that, they have also compounded, but the large percentage of what we are seeing is coming from the exchange rate.
Would it be safe, Mr. Chisanga, as a Lusaka-based economist, or as a Zambian economist, Mr. Chisanga, would it be safe to say at this point it is important to actually get into the exportation of goods, and because Zambia's inflation rate is at 24.60, how would you explain that for a person out there? Do you think it's a good time to invest as an economist? When we talk about business, how is it with a business person to actually continue investing? How would be their profit margins as at now?
Okay, before I answer that, I would love to put this in context. When you are looking at the inflationary pressures in relating to the current scenario, you find that if basically we look at trying to invest in the situation like this, we need to really go for wise investment assets that should be able to actually give us a good return at the end of it all.
So you're saying the investment that one can do out there is just not every type of an investment
Yes,
that would bring more profit margins.
Yeah, sure.
So there are just certain investments that one can do out there that would actually give them this positive profit margins.
Yes, there must be a very good risk assessment factor, evaluation of issues. You really need to do a good projection in terms of how you want, or how would love to see the return at the end of it all. Of course, we are able to beat inflation based on wise investment. That's one of the key factors which you can look at. But again, also, if you look at the effect or the cost and the benefit of inflation, it's basically also gives a morale. Like, for example, if Zambia has really put a lot of investment out there, to help with the reserves or to help with the foreign accounts, this is a very good time, because obviously, if the money comes back in the form of dividends or whatever form it can come, it is able to serve the effect that inflation comes up with. But again, also, if you look at the other side of things, when inflation is going this way, it destabilizes a number of fundamentals, especially on the side of economic performances. Because obviously, when we see that the inflation is moving away from the way we have set it in the range bound, or rather in the target mark, it gives a very difficult situation for us to predict, our investment as well. And also, it just gives a different share, because obviously, like this moment, we see inflation going up, it should be worrying us. Any time when you see inflation climbing up the ladder, that should give you a better security.
Worry as a person.
Yes, because that symbolizes to say that we are now not building a healthy economy. Yeah,
we're not having a stable economy per se.
Yes.
Mr. Sanga, how do you think we can prevent this increment in our inflation as a country, as a nation, for example? Because you're just from telling us to say, when we see the inflation rate increasing, that should be a worry. We should get worried, because that means there is an increment. The power purchase against our currency is actually depreciating in terms of that. So how do you think we should prevent inflation as a country to actually make our economy stable? Because you're saying if our inflation rate is going up, then we're going to have this unstable economy.
Well, it's just unfortunate now that Zambia is at a crossroad, I should put it, because what we are facing with light this moment is that we needed also to have the cabinet as well as the parliamentarian to actually ensure that they make some good policies at this particular time, because obviously we may need to have a government hand when it comes to a certain level where inflation is not slowing down. There is a need for a physical players on the market, or who happens to be government stakeholders, to flow in a contractionally monetary policy, policy which should be able to actually leverage some of the effect that we'll be able to see. Obviously, the consideration is that there is a need to have the hand of a government stakeholder to ensure that they slow down. Because obviously, if you look at the two comparative things, if we have a robust physical and also monetary policy, we should be able to have a good policy transmission. Then we'll be able to control inflation. But again, also on the other side, it's also time for us as a nation to ensure that we look at how best can we participate in the economy. Yeah, because what has really caused so much of this from the where things have stood, it's just basically the issue to do with foreign exchange impact. The fundamentals have been destabilized in some way. So this actually brings about market distortion in terms of pricing, and also it has also been exposed to a lot of speculation as well. So those are the fundamentals that have actually been working so much in this.
Mr. Sanga, with the economy and the inflation rate that we have now, in trying to make it stable, do you think a lot of people have been involved to make it stable? Maybe we concentrate really on certain goods. Have we diverted? Have we diverted as a nation in order to make sure to say, you know what, this is not working for us? let us try this? Or do we just have copper, which is on this hiking, which has this high hiking price, for example, as of this year? Do you think we haven't involved ourselves much as a nation in different exportations and different, involvements in trying to make our economy stable?
In fact, before I come to our copper, of course, copper has been doing very well, and it's a well-known, widely known factor. But I'll tell you one component. When inflation is going up like this, it also makes the international competitiveness very expensive or unbearable. Because imagine if your goods are, subjected to high inflation or sparkling inflation like the way it happened, it's very difficult for you to actually produce locally and throw it into the regional market or other export markets. So now, when you look at even the copper structure or copper sales, the way it is done, that's the reason why, in some way, I've said that Zambia's structure of copper is not beneficial. Even if there is high price of copper out there, what happened is that if copper is taken out of this country, the sales on whatever it is, it's taken from a different account. It does not eat into the treasury here. What comes into the nation as benefit of copper, it's basically the sales tax sales, as well as the receipt for operations. So these are the only thing that we could actually see, triggering into the national economy. So what we have made is that if you were to look at a different comparative narrative, I think we should be able to see that once copper sells, let the money come into the nation, and then start now taking it up from there. But you find that the monies from copper sales goes into Switzerland account or wherever it is. Then here we just have bits and pieces just to make up for operations, make up for tax payment.
You have pointed quite a number of the bad part of us having this increment in our inflation rate. So, Mr. Tsanga, how do you think we can prevent this high inflation rate as a country?
Well, we need to enact the local content policy as a first measure. Of course, this calls for a good political will. And also the other part is that we need also to ensure that we go on a robust strategy of economic reform in order to ensure that we have a local industrialization policy strongly underpinned by the growth of our consumption. So if we are to look at how Zambia is growing, of course, we look at the population growth, look at a number of key factors that we have actually been tracing actually. So from that, it actually tells us to say that we need now to have the game. We need to put ourselves in top gear to ensure that the nation starts producing. If we are able to produce, the impact of inflation will come down, the exchange rate also will normalize or moderate. A number of things will work in proper shape, will actually foster a good balancing act in the economic structure.
Exactly. So, Mr. Tsanga, just talking about we will not continue talking about the bad side of inflation to our economy. What good is it to our economy as a nation? Because you have alluded a lot on how it can affect an economy in a negative way. How can inflation affect our economy in a positive way? As at now, what is it that we can take advantage of to make ourselves, benefit from the same rates that we have right now?
Yeah, sure. Okay. As I hinted, inflation is good to a borrower. It's good to a borrower in a way that you not be struggling so much to do some payment or anything. Of course, it's a different scenario with the national scale in this case, but basically on the bottom line that you not sweat so much to meet up certain obligation when it comes to the payment. And also the good part of this inflation is that it's basically just giving us ideas on how we should be able to marshal some of these, to ensure that we get to a point where we can turn some of this positively, because obviously each and every bad thing that comes is also a good thing as well. So it's giving us now ideas, throwing us with the solutions on which we have to work on. And of course, there are more comparative effects compared to the positive outline of inflation, because obviously if we compare it to be on the side of detrimental part, we'll see that it brings a different shape altogether. But what I would say is that it's just giving us now to wake up, giving us to wake up to see that what can we do as a nation to move forward. But it's a very bad thing. I will still remain on that side.
Okay. And apart from a borrower, who else benefits from inflation? You've actually talked about a number of things.
There are quite a number of people that can, even just economic players themselves. Imagine you yourself, you are selling in the market. You bought something at $10. Then all of a sudden, because there is depreciation of a kwacha, there is inflation also coupled there. Obviously, you make a bit of abnormal profit in some way, because perhaps that could have been the last stock, wherever you got it from there, and you basically equalize certain factors, because obviously with inflation, you really have to match with the prevailing conditions.
Mr. Sanga, with the Zambian livelihood, as of the rate that we move at, talking of a mother who sells charcoal, talking about, a sister who sells tomatoes out there, what is the good inflation rate for our country? What would you describe to be a good, because it's at 24.60
you see
now.
The problem that is there is that just as I hinted to you earlier on, when you look at the inflation pressure points in Zambia, the key fundamental issue has been on the exchange rate, which is actually the driving factor in this case. And if you look at the issue of maybe replenishing some things like petroleum or petrochemical product, which you normally use, you really have to match the balance, international balance, in terms of replenishing those. So obviously, leaving them, actually at some point they will get affected in some way. They have to match the demand based on, even sometimes on some speculations, to say dollar has gone up, so we cannot sell charcoal at 65 kwacha, we have to sell it at 100 kwacha. So those are the all factors that also come into play. But by and large, the bottom line that inflation does not favor anyone in this case, because it goes across the whole demographic profile of the nation.
Exactly.
Yes.
And not to cut you short, Mr. Chisanga, just to make a mother or sister or maybe a brother out there understand what we're talking about with the raising inflation rates, when you talk about the effects, what are the trickle down effects that this has on us from the top people that we have up until down until affecting a person who's doing popcorns in the compounds? How is this rate affecting the nation's economy?
Yeah, so you see, when you go to buy, for example, you're buying bread, we know that partly wheat has been imported most of the times. In our case now, instead of buying the bread at 9 kwacha, now we are looking at it to be almost close to 20 kwacha. So that effect, which has actually triggered the uptick in the price growth, is now what is something that is being faced with a lot of people now. You have made a plan to say, okay, for example, I want to spend 1,000 kwacha for food for a month. I'm sure if you go to ShopRite, you go to any of these supermarkets, the 1,000 of yesteryears is not the one that we can look at today, because obviously the value have changed.
And if you have observed, apologies to cut you short again, if you have observed, there's this story that has been going on of, in Bemba we say, if you sweet potatoes, if you mbukandolo, no, we should be eating, these things and sweet potatoes and everything. I think they are also expensive. it's not a cheap commodity as well. It's not
Yeah,
everyone
yeah,
out there who can
obviously there is a cost of transportation from where they are taken out of. So obviously also we are considering the other component like some other operational costs that can also come in. For example, if you look at Lusaka's landscape, where do you think Kandolo can be coming from? Maybe you talk of Chiwombo, talk of Kafiwa, so that movement also triggers the need to increase the price. That also comes into play.
Mr. Tsanga, this current inflation rate as at now, what does it mean to Zambia? Relating it or considering the hiking prices of copper in the international market, taking you back to history, Mr. Tsanga, in 2019 and between 2019 and 2020, if you observe the tones that we produced as a nation in terms of copper, you would tell me that we had between 13.6 and 10.8% as an increment, an upward increment in terms of the international market and our production in copper. How do you relate it to today's inflation? What does this rate mean to Zambia at now?
Okay, the inflation right this moment has a lot of compounding factors actually. There are kind of other moderating variables that I would put it to say that of course we've got political events coupled there. We've got COVID-19 also depressed as well into the system. So there are quite a number of elements at play. Obviously we would see that if you are fighting this inflation, it's got quite a number of modules, if I can put it in that way, modules which actually have been added to all these things. We've got the core inflation has been affected so much, and it has so much of what we could actually see. But of course, that component of this is coming from the imports driven factors, because that's where we are able to see the pressure points so much. Yes.
So what you're saying is, as a nation, as a country, we need to actually concentrate more on exporting goods and involving ourselves of providing more than others providing for us.
If we had built a very strong and robust bedrock of industrialization, I'm sure we should be able to find a way of counteracting this effect, because we have spent so much on import-driven commodities. That's what is actually destabilizing most of what we're trying to do. Even when you look at the monetary policy rate, which the central bank may even come up with even next month, it cannot do so much of the effect into the economy, because obviously now we are also having two comparative issues now. We are fighting the low economic growth, and also we are fighting inflation on the other side. So we've got two delicate factors which are very difficult for us to play with.
You actually talked about COVID, it being this unexpected, contribution to the increase in our inflation rate.
Yes.
So, do you think as a nation we should plan for such things, and how do we survive this? It's already on us. The increment is already on us. First of all, how do we survive it? And do you think there's a plan that a nation should have in order to actually at least keep a stable, economy?
Yes, okay, I'll give you a scenario here. Of course, all over the world, no plans were made to actually suffer the effect of COVID everywhere, across all the board, including in private companies. But again, also it has just given us a different model to think and operate, in that there should be a contagious plan that should be able to actually put there to incentivize some of these economic shock. Should it happen that it has come like the way we had to experience it, we should be able to find a very conducive way of combating the effect. But again, also the issue that I think for me now it calls like what you've asked me. it calls for us now to find corroborative stakeholders that could actually be drawn from different sectors to ensure that they permanently sit in certain position at national level, to ensure that they anchor some of the factors that happens in the economy. Of course, we've had a very good response in terms of multilateral response toward COVID, where we have people from economic circles, people from different industries. But again, also, that has not been sufficient enough for us to actually see that we put a full recovery on our economy. What we just need now is to find a very good board that should be able to champion, especially those that are doing very well in the economy. For example, if you see that this bank is key in Zambia, this company like Trade King is key in Zambia, we bring those guys and make a board of some sort, economic key steering board, that's at national level, to just ensure that things work out well from that perspective.
Okay,
Yeah.
and I'll take you back a little. You're just from mentioning of bringing on board strong stakeholders
Yes.
that can help us actually improve our economy in terms
Yes,
of
sure.
actually trying to decrease the inflation rate that we have.
Sure.
We already have the strong copper that we produce. And you already spoke of how we can actually use it to decrease our inflation rate. As an economist, what is it that our leaders, whoever, the president, us citizens, well, all leaders, it starts with us. We should actually acknowledge that.
Yes, sure.
What is it that we should do? What is it that we should do as a people to actually make sure that the copper production, the copper selling, the copper that we produce benefits everyone in terms of, it should benefit us, it should increase, and it should actually help us to make a stable economy. Apart from what you spoke about, the tax and everything, where does it start from?
Well, okay, I like the good part that has taken place, where we've taken the mines, some of the mines actually into our care. Though I feel strongly also that that should not be the case where we take 100% ownership. At least we should leave, certainly percentage to a player on the market who should be able to at least pumping a bit of money, because obviously we need now something in the range of about 330 million US dollars to relocate the operations at Mopani mine. But of course, the bottom line that once we have full control of certain industries, certainly production in the nation, or even just when the citizens are very participatory in the economic structure or architecture, then we'll be able to see that the stabilization will come in. And also, as I mentioned, of the local content policies, which actually is the policy under the Ministry of Commerce, that should be strongly enshrined to actually come to do a talk reality show, in that it should be able to be actualized on the ground, to ensure that people start now getting to impact on that policy. Then, if we were to see also the composition of the mining sector, I think it also requires that if there are private mines as well, we need to ensure there's a good policy that should be able to invite at least a Zambian to actually be a key player in some way. The policy formulation should also be favorable, in that it should be attractive and attract the local investors to actually invest in too big outfit or big corporation, or even big investment, so that we're able to have our own money. Because sometimes the sparkling of some of these inflationary pressure may also be coming from the exchange rate, where somebody is trying to do capital flight, taking the money to maybe their headquarters or wherever, so those are the pressure points as well. So we need to see how we can seal up that kind of situations.
You have spoken of citizen participatory activities, and looking at the inflation rate that we have as at now. Of course, we need to survive. Okay, so the 24.60 that we have as a citizen, what is it that I should involve myself into to actually make sure that, of course, I take care of myself and I contribute to the Zambian economy?
Okay, so if, for example, you were to have your own garden, your own maize where you are just taking to the hammer mill so that you can turn into mini meal, you have your own chicken, backyard chicken, or you've got, you try to reduce all this because obviously the issue that you are going to spend money, you're going to spend more money to buy somewhere else. But if you've got that keen involvement into what you need to eat every day, then you are trying to reduce the impact of inflation.
And in closing, unfortunately, we've come to the end of the show, but in closing, how do you describe the Zambian productivity in terms of our production, producing a lot of things and trying to make our economy stable? How do you describe that as looking at the inflation that we're looking at right now?
Well, I will tell you, if you look at the economic performance of this year, I did want to give you a context so to understand. We saw the low profile of balance of trade in January, and we've seen that of course there could have been some seasonal demand that could have also played a part. But if you look at the overall profile of our local or domestic activities in terms of commodity, we are basically just looking at trade kings to be playing a role in a way because they have regional representation and they are doing quite a number of product mixed in their production. And if I were to say the forex that is being generated from there is not much to meet the supply which is required on the forex market, local forex market. So what I'm trying to say is that our production cannot mitigate the impact that we are seeing from inflation. And if you are not very careful, we let it to go up to 30%, then our economy is going to collapse. So we just need to find a very good atmosphere in terms of participation. Obviously, the other issue that we have elections slated just next month, that has also put a very bad shape in terms of finding a missing puzzle on all these things. But what I would say is that if we are to put our light perspective into the economic performance right now, we need to just fully involve ourselves to ensure that we even stop exporting even our little product that we have. Like, for example, if you have soybeans, which actually I appreciate that it has been put on ban, and maize as well. So if we have all these things just right within ourselves, we should be able to mitigate the impact of inflation. Because if the moment we just export anyhow, we should be able to see that inflation is still spiraling. And that, if the inflation creeps up high, then we are going to see the economy collapse. And it will be difficult now for the incoming government because they will find a number of fundamentals in a very destructive model.
That will actually take longer to fix. Actually.
Yeah, in fact, even as it stands right now, we have a very difficult situation because obviously, even when you look at the other component, which I couldn't mention, the other component which is also bringing inflation to this level, it's our national debt portfolio, which has actually also exacerbated to the level where we are able to see it.
Exactly.
Yeah.
Mr. Sanga, we appreciate you for having time to come and actually keep us abreast on the issue of inflation itself. Thank you so very much for watching. Mr. Sanga, before we let you go, won't forget that we're still mourning the founding father, the late Dr. Kenneth Kaunda. What did he mean to you as a Zambian? Of course, we're talking business, but then we won't forget that as a Zambian people, as a nation, as citizens, we're still mourning and we're putting him to rest tomorrow.
Well, you know Kenneth Kaunda, or rather I should put it in the way I like it. Dr. Kenneth Buchizia Kaunda is one person that has really inspired me in some way. Of course, there could have been some other weaknesses which I was not able to center on because obviously I was young and I've just been taught. But from the way I've started even just when I was in school, trying to study economics, I've seen that his concept of socialist was a very good concept, and it really helped the nation even to unite as we have seen it. And if you look at even the biggest value that he has put in most of the people that we are able to see today, he made sure that he made free education. Talk of anyone you think of people like Felix Mutati, you think of President Edgar Lungu, think of HH, all these people, they were subjected to a free education, you see. So look at the composition of our today's generation. So it tells a story to say that we need now to actually also put ourselves into a very light form of education investment, so that we should be able to see how we are going to grow the future generation in terms of leadership as well. So I think I give 100% my hand to Dr. Kaunda. He managed even to come up with university. He built that university, he built NRDC. He did a lot of fundamentals. He managed the mines. The GDP was at one point lying in comparison to Singapore at some point. So that tells a story also. And not only that, we even went further now beyond regional franchise to actually liberate the Southern African countries. So I think it's a massive volume that I can speak of, KK, and it's sad that we have lost the man. But I think the best we should do, though I mentioned this earlier before he died, to say we should not just put the statue when he dies. I think we should have put a statue somewhere centrally where we should be able to reflect on his achievement, or even just, when I visited Kenya, I visited Ghana, could see those hero people that have actually managed to put their effort into their nations. They have got certain figures that you are able to relate with, and you are able to see the features of what they have done.
You've been watching the Business Week. We talk business here at KBN TV, and I was with Mr. Chisanga, a Lusaka-based economist. We appreciate you for finding time over, coming here and talking of inflation, the effects of inflation. We appreciate the information that you've shared with us. Catch us next week on Tuesday, same time. I'm Chanda Juliet.